coming out as a transgender woman in corporate America. That conversation next on our Wall Street Week Daily segment right here on Bloomberg.
Maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back to Bloomberg Markets to the Close. It's time now for our Wall Street Week Daily segment. The host of Wall Street Week, David Weston, joins us as he does every day at this time. David, we always focus, as we do here on Bloomberg, on Wall Street quite a bit. We also focus a lot on diversity and inclusion on Wall Street as well.
Yeah, as you said in the tease, we were going to talk about inclusion on Wall Street, which is so terribly important. As you know, Romaine, culture wars dominate much of politics these days and have spread now to the business world, with brands like Target and Bud Light involved in LGBTQ+ marketing campaigns. But what about in the workplace? And what about an icon of Wall Street like Goldman Sachs? Maeve DeValle lived it firsthand when she came out as transgender as a senior member of the Goldman communications team. And we welcome her now for her terrific book called Maeve Rising. Great to have you here, Maeve.
Thank you very much for having me.
So you have lived this, as I say, not only as a transgender person, but also as a member of the communications team. Tell us what you learned about that you might be able to help other corporations trying to figure out how to really handle this the right way.
Sure, there's obviously a natural tension between people within the organization and underrepresented groups, which sometimes would like your organization to speak out on some of these social issues that are important to them. And then the company has to balance a lot of other things. There's different constituencies that are important to them. So there's that natural tension there. And there's nothing wrong with that natural tension. It's always going to be there. But companies need to listen to their employees. They don't necessarily need to speak out publicly on all issues, but they need to listen and be responsive to what their employees want. And for LGBTQ+ people right now, it's especially important that companies show support for their employees because, as we well know, there's a lot of societal and political ferment on that front. There's a lot of criticism of transgender people, so it's important for companies to step up and fill that void right now.
You saw it firsthand at Goldman Sachs, and now you advise other corporations on these issues as well. From your Goldman Sachs experience, and more broadly, what did you see done well, and what do you think could be done better?
Sure. I think, as I said before, there's a little bit too much focus on the situation being binary. Either the company speaks out on a social issue or it doesn't. And obviously, a corporation has that choice to make, but there's other ways that companies can show support for people. For example, I like to talk about David Solomon coming down and being part of a photo on a Transgender Day of Recognition, along with other people in our LGBTQ+ network, and that photo went out publicly, and that shows that David took time out of his day and is supportive of the population, and that really makes us feel good.
But we know that that type of support, it seemed like traditionally you get a pat on the back for that, or meaning the person who does that. Over the last couple of years, I'm sure you've noticed that our political discourse in this country has gotten to the point where even a small gesture like that can have backlash. And I wonder if you think that makes it a little bit more difficult for some of these CEOs and other leaders to make those types of gestures, knowing that once they're out in public and that photo gets circulated, they could face some blowback.
Yeah, obviously, all these decisions have to be made very thoughtfully because it's a very complicated world right now, and we just saw with ESG. ESG seemed to be a slam dunk, right? And it's not a slam dunk anymore. Yeah. So,
well, actually, I'm glad you used that analogy because we were kind of joking about the fact that ESG is still as prevalent as ever.
Yeah.
They just don't label it as ESG.
Yeah.
And I hope I don't know. Are we going that same route in terms of diversity and exclusion, where we will continue to see that level of support from some of these big companies, but maybe it won't necessarily be with the big megaphone out in public?
No, I'd like to think the current environment, maybe I'm too much of an optimist, is cyclical, and at some point, all this political focus and hatred directed towards transgender and LGBTQ+ people will peter out, and companies will be able to speak publicly. And the important thing to, when you speak publicly is to not backtrack. And we've seen examples of companies that have backtracked and they've just completely lost. They've alienated both sides of the equation. So if you're going to speak out publicly, you need to be thoughtful. You can't backtrack. And that's it.
From what you saw, Maeve, is it a bit different with Wall Street? Because by and large, a lot of Wall Street is not mass consumer facing. It's not like Bud Light, for example, which might be more trickier. I'm not sure at Goldman, did they have a difficult issue here about how their customers might react or how the public at large might react?
No, you're absolutely right. The issues are a little bit different, though we do have some people in our client base that, for example, if we did something that was very supportive of LGBTQ+ people, it might alienate a certain portion of the was very supportive of LGBTQ+ people. It might alienate a certain portion of the client base, but it's much smaller than a global consumer company.
One of the basic issues, I think, for all of us is how do we make sure we have all the talent, not just some of the talent? And that's true whether it's a gender issue or whether it's a race issue, an ethnicity issue. How are we doing in general making sure we've got everybody who feels they belong and they can contribute fully?
Do you mean Wall Street?
Yeah.
I think Wall Street is really trying. In some areas, it's very, very hard to attract and retain talent. I think Wall Street's done a pretty good job getting the ratio of women employees up. Black employees is really, really tough because the war for talent is so competitive. And I just remember Goldman had groomed several very senior and talented black executives who rose in the organization, but they're in such demand that they get poached away. So some parts of underrepresented people are difficult, but I honestly believe Wall Street's trying.
Well, I mean, you said you're an optimist, and I mean, we know Wall Street's long history where, you know, back in the days of sexual harassment of women, the boom boom room, and a lot of other things that today are just completely verboten. Do you see that progress writ large, not just with Goldman and a couple of other big banks, but really kind of across the board in the finance industry? We really shouldn't just say Wall Street, just the finance industry as a whole.
I see it across the finance industry, but I do think the largest banks are probably leading the way. They have the most infrastructure. They have their HR departments most built out. They have better policies. They have better education. So I think the big banks are probably leading the way.
Maeve, it's really great to have you here. Thank you so much for sharing your thoughts. That's Maeve DeValle. She is author of Maeve Rising, Coming Out Trans in Corporate America. On Wall Street Week tomorrow evening, we're going to be joined by Steve Radner, Willett Advisors CEO, and Larry Summers, former U.S. Treasury Secretary, to talk about China and also the 10-year. That's coming up at 6 p.m. Eastern Time tomorrow.
All right, our thanks there to David Weston. Let's toss it back to Katie Greifeld for some breaking news. Katie.
We do have some news out of CVS. Of course, remember that earlier today, CVS had tumbled after Blue Shield of California, that is one of the state's largest health insurers, said it would drop the company's Caremark unit as its main pharmacy benefit manager. CVS now saying that it doesn't see that as having an impact to its 2023 outlook. It came in and reaffirmed its 2023 fiscal year adjusted EPS range of $8.50 to $8.70. It still sees its full year EPS at $6 to 53 cents to $6.75. Again, they are the headline that CVS sees no impact to its 2023 outlook from that news from California. The share is still down on the day by about 8.2%. We'll see if we get more of a reaction there, but CVS sees no impact to its 2023 outlook.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
A very good afternoon, everybody. It is Thursday, August 17th. Carol Master along with Tim Stenivek. Yeah, what kind of day is it when the most read story on the Bloomberg is poor man's cocaine costing $3 a pill threatens to proliferate? That is our most read story. It's a wacky Thursday.
Yeah, okay. It's the most read story. We're going to give you more details on that in just a little bit.
Yeah,
we'll
okay.
do it as a
We'll work it in.
Yeah, we'll work it in. We are live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and on Bloomberg Originals. Carol, it's Thursday, August 17th, 2023.
I call it Friday's Eve. All right, stocks and bonds are down again. Wait, what? Because I thought they are not supposed to trade in tandem. We do see that 10-year Treasury, the yield up about 8 basis points, as much as 8 basis points to 4.33% today, approaching the highest level since 2007. Remember what Katie Kaminsky, Chief Research Strategist over at Alpha Simplex Group, told us earlier in the week? Liz Kaplan-McCormick put a story out on it because she's talking about a 10-year that reaches 6%.
Which doesn't look that, I mean, my mouth was agape when she said that. I was like, wait, 10 years, 6%?
Did we hear that right?
But yeah, given the moves that we've seen this week, potentially that could happen, I guess, right?
Yeah, exactly. All right, so we're going to talk about that because the move up in yields, Tim, we know it, not just a U.S. thing. Global yields, in fact, at 15-year highs. So what's up with the global sovereign trade? We're just going to get the backdrop of what is going on around the world.
Also, what's going on with Walmart? Because shares are actually lower on the day today, despite the company actually raising its profit forecast again. It is cautious about its outlook. Something stuck out to me what the company said.
What's that?
Those student loan payments that are starting up again. Same thing that we heard from Target yesterday.
Yep, it's real.
That's going to squeeze the consumer.
Yep, that's, money that you can't spend on other things that you've got to do to pay back that student debt. We're going to get into that. We're going to talk about the latest out of China and the outlook for its growth woes. Another 24-hour day, another 24 hours, I should say. And so there's more headlines in that day.
Also, AI in medicine. What is the prognosis? Is ChatGPT going to diagnose you?
I don't know.
Maybe.
And then speaking of
that
AI.
That could be good. I don't know.
Speaking of AI, I still want a doctor looking over stuff. Speaking of AI, it is exactly where the VC money is going. Sheila Patel is back with us, Vice Chair and General Partner of B Capital. She's former Chair of Goldman Sachs Asset Management. She's going to stop by. Last time we talked to her was at Milken out on the West Coast. That was in spring. So I'm curious to see what she is saying now. And then wealthy Americans.
They're feeling anxious. Rise in services.
Yeah. Well, it's expensive living.
Having kids, paying for college, that stuff adds up, Carol.
Just
I don't know
living,
if you know
living. All right, we've got stocks near their lows. Time to head over to our TV colleagues, Katie and Romaine, because we're going to talk about the markets. Countdown to the close starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Tim Stenivek. Welcome to our audiences across Bloomberg Television, Radio Originals, all of our platforms, and our partnership for those folks streaming on YouTube. The market is down here on the day, Carol Masser, but you know what?
What?
Millionaires, they're back. I didn't know they left, but they're back.
Oh, everything is good with the world. Yeah, this is popping up among our most read on the Bloomberg. It has to do with some data out of Fidelity. And specifically, they're talking about the 7-figure retirement accounts that they have and climbing, and they're inching towards a 2021 high. I want to look at some numbers here. Tally of such accounts rose by more than 12% in the second quarter to over $727,000. So that's the highest since the first 3 months of 2022. So
this is on the back of the rally in equities?
Yes,
is that the idea?
That's what I was going to say, is then you have the first half of the year that looks like it did in 2023, especially for, tech stocks and NASDAQ, then you're going to see people who are...
If we could just repeat this for like the next 30 years, we're all set, man.
We can all retire then.
You know what is interesting, though, is the people who are millionaires have had, money in their 401ks for decades. They've been saving. But there's some good news for young people out there, too. Pausing student loan debt, they found, actually made people, student loan debt repayments, I should say, actually made people contribute more to their 401ks. So the kids are all right.
Are they?
Except that,
I would just like to point out, though, I mean, you still have
Are you going to rain on the parade?
I am.
Okay.
I mean, because you still have, every time we talk about 401ks, we have to mention there is a huge portion of our population that does not have 401k participation. They just don't even have the option because of the types of jobs they have.
And I would argue, right, didn't your parents teach you, like, the thing you have to do is start, like, if you've got debt, like, pay it off. That's the biggest way to kind of, like, the best investment is get rid of that debt. I don't know.
Yeah.
Maybe not. All right.
Well, that marries really nicely. There was a really good column from Allison Schrager. She's one of our Bloomberg Opinion columnists. She does a great job out with a piece today talking about how wealthy Americans, they are too anxious to enjoy it. That dovetails from a Bloomberg News story that found that in a nationwide survey of over 1,000 wealthy Americans, that is defined in this case as making $175,000 a year. That's roughly the amount required to top the top 10% of U.S. tax filers. A full quarter describe themselves as very poor, or getting by, but things are tight. Half describes themselves as just comfortable. And it creates this really interesting economic conundrum, which Allison pointed out, that makes the overall economy more fragile.
I think the real takeaway that I had out of this article was really that idea of sort of the economy and economic conditions being much more of a feeling, right? It's not necessarily just about what's in your bank account or what the GDP numbers say. It's kind of how you feel, right? And if you feel that things are more expensive, you feel that you can't necessarily keep up with the Joneses, then you're going to feel poor, even if the numbers say you're not.
But it goes back to those rising costs for those essential services that people pay for: childcare, housing, college. Those have risen so much faster than inflation over the last few years.
Well, the good thing is when AI takes all of our jobs, you don't need college anymore, and childcare will just be done by the robot.
Chat GPT to watch my kids?
I'm sure you can. I don't think it will be done well, but sure.
You can be done well.
Can a robot love?
I think so. They can be programmed to love.
Katie, you want to tell us something?
Just thinking the big thoughts, you know?
Wow, you've just opened up a wide door. I guess the point is, if the wealthy are feeling concerned and they stop spending, you just have to wonder about the majority of Americans who are barely getting by, how they must be feeling and what it means ultimately then for economic growth. So, I don't know. Could be bad. I don't know, guys.
Allison's on our program a little later, too, so when you guys are off air, come on over to the radio studio.
Ask her about the robots.
Talk to Allison. She's going to be joining us today.
Maybe ask ChatGPT about that one. All right, guys, we're going to be back in less than an hour's time. Our cross-platform radio, TV, YouTube, and Bloomberg Originals. We call it Beyond the Bell. We're going to count you down to the close at 4 p.m. Wall Street time. Join us. Rate cuts, we're coming. Well, they did if you were in China. Of course, they are struggling with subpar growth and some other issues. You can read about all of that on the Bloomberg, and we're going to cover it a little bit later on here on Bloomberg Business Week. Today, global government bond yields extending their climb, 30-year, reaching the highest point since 2011, and Tim, yet other benchmarks getting back to 08-07 levels. We're near it.
Yeah, this as resilient economic data challenges the view that central bank rates are peaking. With more on today's trade, we've got Bloomberg News chief correspondent for global macro markets, Liz McCormick. She joins us on Zoom in New Jersey. We also got with us Bloomberg News deputy team leader for U.S. equities, Jess Metton, because it's also an equities story today, guys, in our Bloomberg Interactive Broker studio. I do want to start with what's going on in the bond market, Liz McCormick. Give us an idea of what the signal is that the bond market is sending the world.
Yeah, I mean, just globally, the sense that there's a resilience in the economy, especially in the U.S., where the data, much of the data this week has proved to show that the economy is strong, even though, last week we got, inflation is coming down, but that recession picture just keeps getting pushed off further. And we had the minutes yesterday from the Fed that kind of signaled, Fed officials are saying they may have to do more rate hikes. So I think it was like the world is getting religion that it might not be over, like all the tightening, although you got to say we're closer to the end, but that it may not be over. And then there's some other factors causing long rates to rise even faster. But yeah, there's a feeling that, we might have more tight policy for a while now.
Liz, how do you think about it in terms of global sovereign and what we're seeing, the move up? Is it just a reminder that inflation is still in many places, obviously, a global thing?
Yeah, of course, we have some emerging countries where their central banks are easing, so they've had enough inflation come down to turn. But look at in the UK, the gilt yields are really rising. There's a sense that the Bank of England, there's some, less than 50%, but betting that the Bank of England next hike could be 50 basis points, or at the least that in the end, the terminal rate is closer to 6 or higher. So it is pretty much, at least for developed countries, a global phenomenon. And and that's kind of a good point for us to be looking at, because next week we have Jackson Hole, right? So we'll be looking at what Chairman Powell and Christine Lagarde have to say as far as you know, I'm sure they're not going to want to say, you know, we've won the war, right? You know, they're going to remain vigilant and data dependent, but everyone's going to be watching if there's any more clues on what they're going to do next week when they chat.
Yeah, I want to bring in Jess Metton here to talk a little bit about the equity market, Jess, because we're seeing a sell-off intensify on, especially on the NASDAQ right now, down more than 1%. The S&P 500 down more than 0.7%, the Dow down 0.8%. It's kind of followed this similar pattern over the last few days where you see stocks like kind of doing nothing for much of the morning, and then the sell-off into the afternoon intensifies. What's going on?
It does, and especially August is just historically the second worst month behind September when you're looking at the S&P 500. And to your point, when we're looking at these more growth-oriented corners of the market, especially discretionary, right? Those are the ones leading decline in the S&P 500, down more than 1%. It's interesting because even when you're looking at what's happening, say, with the minutes, more backward-looking, because we have seen more Fed officials in recent weeks speaking, especially when we're talking about voting members, but it's still very split. So you have Patrick Harker, John Williams in recent weeks signaling that potentially maybe they might be near done here, but still keep rates elevated for a while. But John Williams did open the door for potential cuts next year. But then on the other side of that, you have Mickey Bowman, who still is very hawkish on that side. And then Neil Kashkari spoke earlier this week, too, talking about how he still thinks they're a long way from cutting rates.
But once done.
Yes, exactly, on the other side of things. So you can still see like the fierce divergence there ahead of Jackson Hole next week.
Hey, Liz, come back in, because what also struck me is that the tandem in terms of the sell-off in stocks and bonds, which is not supposed to be how it goes, right?
Yeah, exactly. And it's funny, I was reading our wealth reporter, Suzanne Woolley. It's like months, just the world changes. You know, Fidelity did their nice reporter saying,
just talked about this.
Yeah. Did you? Okay, sorry.
No, go.
It's fine. I want to see what it looks like this quarter, though.
Yeah, we want to see what.
That's what I thought. All that money is gone. You know, stocks are coming off, like Jess said, and the bond, the year of the bond, we were looking at all the indices, and most of them are in the red for the year. And I'm like, oh, God help us, it's not going to be like 2022, but those 401k millionaires probably won't feel so good at the end of the third quarter. So, yeah, I think that things are, you know, just turned around since just a few months ago.
Liz, anything unusual in the Treasury trade that makes you kind of scratch your head? I mean, you know, we understand, we keep seeing, as you said at the top, that much of the U.S. data, let's just take the U.S., you know, continues to show strength, which kind of, you know, goes back to that soft landing story, if you will, which is a good thing, but it also is a reminder that there's strength out there, and that's also tricky for the Federal Reserve. So are things lining up when you think about the data points and what's happening in the Treasury trade, or is there something that you're like,
Well, I think what's happening is the long end is really taking off, because let's just say, like Jess said, there's a real mix, which is normal towards an inflection point in the Fed, you know, policy agenda. But say the Fed does nothing more, but stays there for a year or so, 5 and change, right? The long end, it has that to contend with, but also forces like more supply and investors feeling like, oh, maybe I need some more compensation to kind of go out the long end, you know, so-called term premium, and other forces that are kind of lifting the long end. You know, forever we talked about curve inversion, which it's still inverted, but you're starting to see some of that move. And I think that's what's really walloping people. Plus real rates. I'm sure you've talked about real rates. So those kind of pure read on the economy and spliced out any risk of inflation, you know, those are near 2% on most of the longer tenors. Remember, like last year or so, it's all, you know, the timing's becoming a blur, but they were negative, right? So you're seeing a lot of forces, not just nominals, real rates, curve steepening, that are just showing the market is kind of saying, oh, you know, we better adjust here.
Jess, when you look at the equity trade, is it based off what's going on in the Treasury trade? Is it fundamental? Is it some of the retail earnings news that's going on? Is it valuations? What is it that's really shaping what's going on the equity side of things?
I think it's actually the dollar. So when you're looking at the dollar spot index for Bloomberg, that actually has fallen from its peak back in last September about 8%. But if you look over the past month, obviously the Fed did have another rate hike last month, but the dollar is actually around 103 when you're looking at that spot index. So it's gained roughly about 4% that time span. Also, if you look at the relative strength index, which obviously, as you know, Carol, I know you watch the technicals pretty closely, it's actually near 70 at this point. It had been around 25 in mid-July. So that's showing you how far up that has moved there. And typically 70 would be that threshold where it's a bit overbought, but it had been underbought for a while there. So I think that is a strong correlation. Obviously, it's not something where people are thinking the dollar's still going to be on a tear, just because we do know the Fed will eventually be close to near done here. But in the shorter term, that's been another metric in addition to yields that has been weighing on equities.
But I do wonder about, if we're thinking about investments and where you want to place, is there some point, and I'll ask you both maybe, Liz, I mean, do global investors say, okay, where is the relative safer place for me to once again park my money? And is it getting back to dollar-based investing?
Well, like Jess said, the outlook for the dollar is uncertain, but I mean, the folks at Citigroup just had a note today talking about, and you know, we looked at they call it the tick data. China's holdings of treasuries fell. It's a few months delayed, but in June to the lowest since 2009. And they were saying if the yuan continues to weaken, there may be impetus for selling of treasuries from China. So, I mean, the foreign investors, and they have rates in Japan that are a little higher, you know, with the yield curve control being tweaked. So there's a lot of questions of, you know, is there going to be such voracious demand for U.S. treasuries? Because there's other things that are more appealing. So I think it's in doubt who's going to be the buyers in the U.S. And I don't think everyone just wants the dollar-denominated debt right now.
And to Liz's point, if you're looking at the yen versus the dollar, it did breach that 145 mark. And so that is what's prompting those expectations that we could see the Bank of Japan come back in with more intervention.
Okay, I want to go back to equities here because, Jess, you wrote a column yesterday that talked about valuations.
Yes.
Where are we when it comes to, you know, how expensive the stock market is right now after this run-up?
This was Warren Buffett's particular favorite gauge when it comes to measuring valuation. So if you look at the Wilshire 5000 index and divide it by annual GDP, it's not at where it's a smoke signal, but it's at the highest level it's been in close to a year. So that would give you some indication that it's frothy. Obviously, it's one metric, and that doesn't call everything. But if you look at that in addition to some others, that's been another key indicator that some of my sources have been looking at. But I mean, if you look at Bloomberg Intelligence data, you take out the top 5 companies in the S&P 500. Actually, the forward PE for the S&P is only at about 18 compared to the top 5 is at 30. So it tells you a big divergence there.
All right, folks. What's your
so that's like, don't buy the index level, buy, you know, individual equities is kind of what it's saying.
Well, actually, it's telling you that the top 5 companies in the S&P 500 is really skewing the valuation. So if you look at forward earnings at 30 versus just cheaper. 18, so the rest of the index, it's not cheap, but it's not nearly as expensive as when you're including those top 5 names.
All right, you
It's
too.
been the same story for years, though.
It has.
Sorry.
We so appreciate a lot to think about, and you guys just pulling it all in. Liz McCormick, Chief Correspondent for Global Macro Markets at Bloomberg News on Zoom in New Jersey. Just met, and of course, our Deputy Team Leader for U.S. Equities at Bloomberg News in our studio. She's going to be joining me tomorrow on Bloomberg Business Week. Tim and I, though, just getting started on this Thursday. This is Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We are just about the lows of the day right now. We've got 39 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all red on the screen. A 290-point drop right now for the Dow Jones Industrial Average, down by about 0.8%. The S&P lower by 34, down 0.8. NASDAQ, the composite index, down now by 155 points. That is a drop of just about 1.1%. 10-year yield now 4.92% with a 2-year yielding 4.94%. Linda Dissel is senior equity strategist at Federated Hermes.
We're definitely in the camp that says, what's going on here with these bond yields? And we wouldn't have thought that they would go up above 4% or up above it much. And I realize we opened today around 4.3% on the 10-year. It really doesn't make sense if you think it has to do with an inflationary problem. I wonder if it has to do with the fact that markets are starting to realize that to get inflation below 3%, though, is going to be much tougher than you might think, and particularly with the job market as tight as what it is.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Again, the 10-year 4.29% with a 2-year 4.94%. Spot gold down $3.50 the ounce to $18.88, drop there of just about 0.2%. West Texas Intermediate crude down 0.9%, $80.08 a barrel on WTI. The 3 largest U.S. airlines plan to more than double the number of flights to China in coming months as they take advantage of a deal between the nations to ease pandemic-era travel restrictions. Among some of the airline stocks today, they are all flying lower. We've got United down 2.3%, American down 2.7%, and Delta down now by 2.2%. Recapping, stocks lower, in fact, just about the low of the day right now, with the S&P down 36, down 0.8%. Applied Materials after the close of trading. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet breaking it down, the trade today, as he said, stocks pretty much at their lows. And among those stocks on the decline today, 2.6% lower, in fact, is Walmart staying at its worst levels. That despite the world's largest retailer lifting its annual profit outlook again. But you know what else was with it, Tim? A bit of a cautious tone.
Yeah, it's always good to look at the commentary, and perhaps this is why the stock is lower. The cautious tone on consumers in the U.S. economy. Walmart said that the rising borrowing costs, okay, we know that those are hitting consumers. Look at what's happening to, credit card loans, people having to pay off those, and then, of course, mortgage rates as well. And the resumption of student loan repayments will add to the strain on U.S. household budgets in the coming months. We've got a great guest with us this afternoon. Join us with more on the results outlook and on the company that is the world's largest retailer. We got Bloomberg Intelligence senior retail staples and packaged food analyst Jen Bartashis. She is joining us from New Jersey this afternoon. So why are shares of Walmart lower, Jen?
Well, I think you nailed it when you were talking about this in the intro, and it's really just that conservative outlook. And you have to remember, for retail, back to school and holiday are the most important seasons of the year. So if Walmart's striking a cautious tone heading into those key seasons, that's probably what's pulling the stock down a little bit this afternoon.
It's like one of those
But was the cautious was the cautionary was the caution with the actual outlook when it came to numbers, or was it the commentary that we repeated there about student loan repayments and borrowing costs?
It's more about the commentary about the state of the consumer.
Wow.
Because Walmart's numbers were great, and the appeal of their value proposition is continuing to grow. So when you listen to what management's talking about, they're gaining share in some critical areas like grocery, but it's that cautious tone. And the problem is that grocery's a great business, but it's not a high margin business. And so for Walmart to really be successful, they want to incorporate more of that general merchandise sales, and those are the things that are important to back back to school and holiday.
And for those who missed, and I bet Jen heard it first hand, the CEO, Doug McMillon of Walmart, said on that conference call with investors and analysts, the good stuff, jobs, wages, and pockets of disinflation are helping our customers. That's the good stuff. The bad stuff, but rising energy prices, resuming student loan payments, higher borrowing costs, and tightening lending standards, and a drawdown in excess savings mean that household budgets are still under pressure. I mean, Jen, that's a big laundry list. And especially for customers that typically shop at Walmart, I mean, you're talking about a lot of Americans. This is where they shop, and that's a big, stress list, if you will.
It really is. And what we're seeing and what the pattern so far this year has been is that people do want to spend, but they're being super selective on where they're doing it, which means that they're saving everywhere else that they can. And so where you do see that people are still going on trips, they're still going on vacation, they're still going out to dinner for special occasions. That's where they're choosing to do that little bit of splurge, but they're making up for that splurge by saving and saving, cutting down on other expenditures. And that's part of the behavior that we're seeing happen at Walmart as well.
Go ahead, Carol.
Well, Tim and I constantly talk about, Amazon. I need something, go to Amazon.
It's
I get
so
it.
bad.
I just did a big thing last night because I know it's easy to return and stuff. But tell us what?
Well, I was going to say, I heard Jen, I heard you this morning on Surveillance, and you were like speaking to me. I think you said everybody goes to Walmart for something. Is that what you said?
It is. It is. And it's true.
It's so true, Carol, because I do the vast majority of our shopping at Amazon. But because I have American Express, I'm able to join like the Walmart
Plus.
Amazon Prime thing, whatever it's called, for free. Like you can join that for free. And if we need something that's not available on Amazon, we do it at Walmart, and it's like the same thing as Prime.
So Jen, talk to us about Walmart Plus. How big a deal is it, and how much of a growth engine it potentially is or will be for Walmart?
So Walmart Plus started about 2 years ago, so it's still a pretty new program, but it does compete with Amazon Prime, and I think it is going to really become a very powerful driver for both sales and profit for the company over the next 5 years. We actually published a research piece on this earlier this week, where we think over the next 5 years it can add $100 to $160 billion in revenue for Walmart.
That's
and
real.
That's just on that program. And if you put it in perspective, that's the size of Target, right? So,
wow.
So it has the potential to really be a differentiator for Walmart. And part of the reason for that is that it appeals exactly to what people want, which is convenience and access to low prices. And so the fact that you can have deliveries of groceries or things that are in store to your house on the same day with no fee associated with it is a pretty powerful engine for them to build off of.
Can they do it in a way that gives them margins?
Yeah, and if you think about the way a retailer makes the most margin, it's when somebody comes into the store, buys something, and takes it out to their car and takes it home themselves. The next most profitable thing is when somebody comes and they pick it up at the store, curbside, and then take it home. And then the third is when it's shipped to your house, right? So what Walmart has done is that part of the value proposition is that curbside pickup. And so that business has been growing very quickly for Walmart and is getting a lot of adoption. So that's actually a pretty good way to engage digital customers without having the margin drag that you would associate with things that have to be shipped to your home.
So Carol and I Carol's in New Jersey, I'm in Brooklyn.
We're just outside.
But so you're in the city. What I'm saying is you're in the city. You're not like driving to these places to actually pick stuff up.
No.
When I was on parental leave, we were visiting my parents in California, and my sister was like ordering stuff from Target, and we'd drive there. Anyone listening who has a car is actually laughing at me, the fact that I'm like talking about this, but we're such strange animals in New York City because we don't take advantage of these programs. But I will tell you, it is so easy to order something on one of these apps and then drive up to the curb, and they literally bring it out to your car.
I will tell you, my daughter, who goes to school 6 hours outside of New York City in a southern state, it's much more like residential and so on and so forth. I remember one of the years we were driving to her school, and Jen, along the way, we kept ordering from Target. Like, she's like, oh, I need this. So we'll be like, okay, well, in an hour, we'll be at this Target. And we would just pick up curbside, and it was incredible.
And it's that convenience that's really driving the success of these retailers, because they're not only offering value, but it's convenience. And this is where, for Walmart's perspective, Amazon is a behemoth, and they're very good at what they do. But Walmart has been building out the size of its marketplace, the number of sellers on its marketplace. It's becoming more competitive, and that powerful engine of being able to pick things up at the store at your convenience, or have it delivered to your home same day, is a pretty good strategy that they're following.
What's that stat, Jen, with the X percentage of the U.S. population lives within, just a couple miles of a Walmart?
It's like over 85% of the U.S. population lives within a 10-mile radius of a Walmart, I believe, is what
incredible.
The company has said.
All right, so you were sitting down with Doug McMillon, and you wanted to, I don't know, you had 2 minutes with him. What would be the question you would ask him?
Well, I would ask him about things where the company hasn't really given a lot of disclosure. I would ask him about the size of their membership for Walmart Plus. I would ask him about the current profitability level of their online business. These are things that we know they're building, things that we know that they're working on, but we don't have a lot of detail behind it yet to understand how profitable it is or will be for the company long term.
Yeah, that's math. I'm like looking at your research too about, advertising revenue at Walmart. Like, it's just this company that the broad reach, but just evolving.
Jen, you're the best.
Yeah,
You've been
you
up
are.
since the crack of dawn covering this stuff. We love it when you join us and we get to talk. Also, just be honest, do Carol and I just sound like complete Luddites? The fact that we just found out about this curbside pickup at
I've been
big
doing
box
it
stores?
for a little while.
Not in the least.
Okay, good.
Hey, Jen, and no worry, it's just back to school shopping is next, and oh yeah, the holiday shopping season, so you'll get plenty of rest, or not. Listen, we do.
I think it's going to be a busy second half of the year. Let's put it that way.
Well, we'll be checking in with you, no doubt about it. Jen Bartasha, she's Bloomberg Intelligence Senior Retail Staples and Packaged Food Analyst. Really a must-read among our Bloomberg Intelligence team, and so appreciate her finding some time. Walmart shares, though, still under pressure in today's trade.
Well, let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Hello, Tim. Well, there are still questions whether former President Trump will be participating in next Wednesday's Republican presidential debate. He's refusing to sign the pledge to support the eventual Republican candidate. Bloomberg's Anne-Marie Hordern says he is expected, though, to make news next week, even if he's not at the debate.
One thing is for sure, he has to show up in Georgia to turn himself in along with the 18 other defendants in this case before August 25th. Some people are saying maybe he does that on Wednesday, and then the debate basically comes once again about him, and he takes all the oxygen out of the room, whether or not he's physically there or not.
Bloomberg's Anne-Marie Hordern reporting from Washington. Some of Trump's followers are increasing threats against people involved in some of the criminal cases against the former president.
A Texas woman is under arrest for allegedly sending a threatening voicemail to Judge Tanya Chutkan, who is overseeing the special counsel's election conspiracy case. Abigail Jo Schrei also allegedly used racist slurs and threats against Democrats in Congress and the LGBTQ community. And there are threats to some grand jurors in Georgia connected to the Fulton County DA's case against the former president. Some of their personal information has been leaked online. In New York, Michael Barr, Bloomberg Radio.
The Barbie movie appears to be an outlier with its portrayal of strong women. A new study on inclusion in film for 2022 finds for every speaking female, there were more than 2 men. And the report by University of Southern California's Annenberg Inclusion Initiative found progress toward parity on the screen has basically stalled since the pandemic. The director of the institute says the lack of progress is disappointing following decades of advocacy. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow, the S&P, NASDAQ all in the red, very much in the red. In fact, just about the lows of the day on the S&P right now. Let us head over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks under pressure after a positive start. Dow is currently down 277 points. S&P dropped 32, and NASDAQ is lower by 147 points. The U.S. 10-year yield at 4.29%. Gold is down 3. Oil still in the green. And Bitcoin is down by 3.5%. Among the main 11 S&P sectors, only energy was in the green. And leaders to the upside in the Dow, Cisco, Chevron, and 3M, while Walgreens and Intel led to the downside. After earnings, Walmart fell 2.5%. And big news in the healthcare space, Blue Shield of California dropped CVS Health and tapped Amazon in a challenge to the PBM model. CVS fell 9%. Cigna declined by 6%. In other news, Hawaiian Electric fell another 20%. And wrapping things up, Applied Materials reports after the bell. Live from the first breaking news desk on Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg. Type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. About 18 minutes left in today's trading session. It's been safe to say for at least the second half of the day, decidedly lower, as you just heard from Bill and Charlie tracking the trade here. Really, the NASDAQ down the most on a percentage basis. So stocks are down, bonds are down too, as yields have moved up, Tim.
NASDAQ is down 7% just this month, Carol.
Yeah, August has been a bummer.
Yeah, it is.
Except if you're a bear, then you're like, hey, finally, my time has come.
Weather's been pretty good.
No.
Hasn't? Okay, that's true.
All right, so let's get to it. Let's talk about the trade. Back with us is John Augustine. He is CIO of Huntington Private Bank, joining us on Zoom from Cincinnati, Ohio. John, hey, nice to have you back here with Tim and myself. If we may, first up, because you are at Huntington Private Bank, you are a bank. Talk to us, though, about the banking trends and what you guys are seeing, stress points. I don't know what you can tell us about loan demand. What are you seeing just in general about the lending environment, what it tells you about the overall macro environment?
Well, from my perspective, at least, a healthy bank, the environment is, business spent on CapEx in the second quarter. I don't have any numbers for the third quarter so far, but one of the surprises in the overall economy and around the Great Lakes, businesses were spending on CapEx in the second quarter. And arguably, that's good news for the economy.
What do you think it's going to look like this quarter, though?
Probably slows down a little bit. I mean, they go through cycles just like you and I would buying durable goods. But it'll probably slow down. But so far, not a lot based on the economic reports this week.
So the people who want to go out and borrow money, the business owners who need to go out and borrow money, even at these high interest rates, they're still doing it?
There's probably more cash. They're using more cash. Just like you and I, consumers are using more cash, paying cash for high dollar items. Businesses are doing the same thing. We're still, $3.5 trillion in cash levels above where we were pre-COVID.
Wow.
Well, so in
as a country.
Yeah.
So
not just you and me.
Yeah. Carol might be, but not you and I.
Hey, so John, you shared with our producer Paul Brennan a top list of items on your mind. Of them, what is the one thing that you think and talk about the most, and that you think we should all be paying the most attention to as investors?
The Fed. We erroneously thought the Fed would be done at their June 20th meeting. And they're not. They'll probably skip in September, but probably raise in November. So it's the Fed that's still on our mind. We thought they'd be off our mind by now, but that's not the case.
Why do you think they'll raise again in November?
GDP. Inflation's probably going their way enough, even though we get another report in in September before they meet. But GDP is not going their way. In other words, GDP may be, according to the Atlanta Fed, accelerating in the third quarter. That will come out about a week before they meet in November. That's probably why they raise in November.
You're talking about the, just so everyone is aware, you're talking about the Atlanta Fed's GDP Now Index, right?
Yeah,
it rose,
the Now tracker with over 5%.
It rose yesterday to 5.76%, Carol, from 5.03% in third quarter versus its previous release on August 15th.
That's impressive. That is impressive.
It can move around though, John, right?
Oh no, it's just this week. Think about this week though, Carol. We were 3 for 3.
Yeah.
This week was activity economic reports, and we were 3 for 3 that those came in higher than expected.
Yeah, it's kind of the good conundrum, if you will, if you're the Fed, right? You're kind of glad that the economy hasn't fallen apart and people are still working, but it also means that there's still momentum for people to go out and buy or invest and continue to kind of keep inflation either at these levels or even potentially higher. That's the conundrum we live in.
Yeah, I mean, and you see that in markets, right? The story about in August so far has been about yields moving back up, and the economy is part of that. We would say the economy is part of that. Stocks aren't quite sure what to do with it yet. But good news, we would say, we agree with you. Good news, employment is staying high, and GDP growth is arguably staying high. But the Fed keeps referencing it, and they're going to probably talk about it again at their September meeting.
So, John, you've got new money. Tim always asks this, and I think it's a good question when we have folks like you on. But if you've got new money, do you commit to the fixed income world where you can get decent yields, or the equity world where there are questions about valuations, but if you think the outlook is good and growth momentum continues, that kind of makes sense? Or would you prefer alternatives of some sort?
Well, what we talked about internally with our portfolio managers yesterday, we have about 70 portfolio managers through the Great Lakes region and then out west. And what we said was probably buy bonds now and do 3 months to step into stocks. We're in the scary season for stocks, August, September, October. So step into stocks, be a little bit more aggressive buying bonds right now. And so far that's working.
How far out though in terms of bonds are you comfortable to go?
Not far. We have a short-term bias, so we're generally think of the 3 to 5 year space. Think of the 3 to 5 year space.
So going back to the Fed, is there a chance that the Fed isn't done after November?
Yeah, I mean, there's always a chance. We hope they're done after November. Obviously, the futures market thinks they're going to be done. But if the economy, what they're worried about, let me back up, is the 70s. Where inflation decelerated, but then everything sped back up, and they had to raise rates again. And that's what they're fixated on right now, even though we're obviously in a much different economic situation.
But what that could mean is
fixated on the 70s.
But maybe we could interpret that as holding rates higher for longer rather than cutting, or rather than raising again.
We hope, yeah. We don't know raising again, but holding higher for longer. They're finally getting to, by the way, the futures market with that thought.
Hey, John, just got about 45 seconds left here. You guys recently added Adobe, Amex, American Express, Rockwell Automation, Parker Hannifin, T-Mobile, Netflix, Starbucks, Salesforce. It's a variety of companies. Is there any kind of commonality, meaning was it a fundamental play, valuation play, technical play, or was it kind of a stock picker's market? And again, got about 40 seconds.
Sure, stock picker's market. What our equity team generally does is make their buy and sell decisions after earnings season. So there's something either in the conference call or in the earnings report that triggers them. So that those were some names there that you talked about, but they'll generally do their trims and adds after earnings season. We like that actually. That gives a little bit more, let's say, conviction to our thoughts there. Even though they may not work out in the very short term, we like what the equity team does.
All right, great conversation. John, thank you so much. Be well. John Augustine, he's CIO over at Huntington Private Bank, joining us on Zoom from Cincinnati, Ohio. Folks, just about 10 minutes left in today's trading session, hovering, at least on the equity side of things, narrow lows of the session here. What do you...
2 days in a row, people from Cincinnati. I love it.
Just for you, I guess.
Just for me.
This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are minutes away from the latest numbers out of both Applied Materials and Ross Stores. Ahead of those reports, we do have Ross Stores trading higher by 0.2%. Applied Materials lower now by 0.6%. Again, those earnings coming up after the close of trading. CVS Health shares have tumbled 8.1% after Blue Shield of California, one of the state's largest health insurers, said it will drop the company's Caremark unit as its main pharmacy benefit manager. And with more on the story, here's Bloomberg's Denise Pellegrini.
Charlie, the insurer says it will work with a group of companies to streamline the complicated system that Americans currently use to pay for drugs, aiming to save millions of dollars in the process. Companies that provide health benefits have long bemoaned the lack of visibility they have into how much drug middlemen pay and charge for medications. The California insurer's move will test whether it can assemble an alternative involving Amazon.com, the retail giant whose greater penetration into the drug supply chain has been dreaded by pharmacy benefit managers and by drugstore chains as well. Charlie.
And that's Denise Pellegrini reporting. CVS shares, they are now trading lower by 8.2%. Sticking with retail, Walmart raising its annual profit forecast again, but struck a cautious tone on consumers and the American economy. Walmart shares, they're down now by 2%. And those are some of the top company stories that we're following for you at this hour. I'm Charlie Pelleton. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just a few minutes. We're heading over to Scarlett and Romaine. We're going to talk about the trade, wrap up the Thursday trading session. In the meantime, this is fast. Two things we need to get to. First of all, just real quickly, Goldman apparently, Bloomberg exclusive by Sri Natarajan and Hannah Levitt. It hit about, an hour and a half ago or so. First bout of U.S. regulatory scrutiny is setting off a hiring spree at Goldman Sachs as the company's leaders seek to remediate issues raised by banking supervisors. So they cut a lot of workers, but it sounds like they're hiring because of the Fed scrutiny.
Yeah, Goldman's enlisting several hundred new staffers to help address concerns from authorities, including the Federal Reserve. This according to people with knowledge of the matter who asked not to be named discussing confidential plans. It's back office hiring, and it comes even as the firm cuts executives from money-making ranks amid a slump in business.
Yeah, so it's kind of interesting. So definitely check that out. Among our most read in the Bloomberg. In the meantime, this story, when it passed, I was like, wait, what? So New York City rolling out a plan to convert vacant offices into as many as 20,000 new housing units by creating a multi-agency group to help developers cut through red tape and rezoning a section of Manhattan known as Midtown South, right? People talked about this, said it couldn't be done. We're wondering, especially post-pandemic, as a lot of offices are just kind of sitting there. I don't know, what do you think?
I think it's great.
Yeah.
It comes after Mayor Adams and Governor Kathy Hochul. They've been looking for an ambitious program to address the state's housing shortage. It was rebuffed by fellow Democratic lawmakers in Albany earlier this year. Much of Adams' plan is still going to need state approval. So New York, Boston, San Francisco, and other major U.S. cities, we're all struggling with the challenge of what to do with office buildings that have been emptied by the shift to remote work, and also an affordable housing crisis that's driving up rents. So converting offices to housing, it's complicated and expensive. Think about this, Carol.
Right.
When you're in an office, especially open offices, they're not built like an apartment is built.
Right.
There are communal bathrooms. So all plumbing in the entire building needs to be changed in order to convert these. This is really complicated stuff.
Well, and there were folks that said it couldn't be done. So it is interesting to see that, yeah, actually we can do it. So as we talk about the need for affordable housing, I agree with you, Tim, a good move. So we'll certainly continue to track that and bring that to you. In the meantime, we are certainly tracking the markets. We've seen stocks lower. We're just coming off our lows, but still down across the board. And we've seen bonds move lower, yields move up. We're going to talk about the trade. It's complicated, everybody. Right now, countdown beyond the bell, starts now.
All right, stick with us here. We are moving closer to those bells. Full market coverage, as always, right here on Bloomberg, as we take it to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to take us beyond the bell. Carol Masser and Tim Stenovic bringing together our Bloomberg television, radio, and YouTube audiences worldwide as we parse the most crucial moments of the day. And Carol Masser, there have been a lot of interesting moments of the day, but I think the most crucial moment is right now.
Yeah.
Session lows.
Well, yeah, exactly, right? And we're holding on to it, right? It's not like we're seeing some buying, as we've often seen in the final few minutes of trading. I'm just looking at, the sector trade here, and you are looking at a very conservative trade here among the outperformers, but they're still down for the day. Something like materials, utilities, energy, your only outperformer here of the major industry groups in the S&P 500.
And it feels like for much of the week, at least, we've seen kind of similar behavior with traders. I mean, stocks do nothing for much of the day, and then they decline into the close. Volume goes up, and we hit session lows when we get close to the bell.
Yeah, and I'm just looking at volume right now. For the S&P 500, volume is 10% above the 10-day average. So again, more activity, more trading on days where you have declines.
Yeah, absolutely. Here, of course, that's basically right at this time right now. Across the tape, still looking at roughly, I think, around a little less than 11 billion on the day. I am curious, though, about this idea, though, too, of this kind of seasonality of this, too. Like when you have so many people away, you can get these sort of outsized moves, not only in equities, but you're seeing similar moves in treasuries as well. All right, we get the closing bells here. Let's just walk through them real fast. With the Dow Jones Industrial Average lower once again by about 300 points or about 0.8%. And I'm just going to double check this, but now the Dow Jones Industrial Average looks like it is going to close below that 50-day moving average, showing in the S&P and the NASDAQ. The S&P closed below its 50-day moving average earlier this week, the NASDAQ last week. The S&P down again, 34 points or 0.8%. The NASDAQ composite down 158 points or about 1.2%. And an interesting milestone as well, almost averted here for the Russell 2000, lower by about 1% on the day, and it is just a whisper away from its 200-day moving average. So on a technical level across the board, things are not looking good.
Yeah, I feel like we are talking a lot about the technical trades, right? In terms of things that were once overbought, now getting maybe closer to oversold, or just kind of watching some of those technical moves on a lot of major averages, Scarlett.
All right, let's take a look at how the sectors have performed. And we can do it two ways, right? 11 groups or 24 groups. This is more dramatic, looking at 24 groups, because energy is the only group that is in the green. That is as oil prices rise. Exxon has been higher all day. You also have pharma stocks gaining just by a little bit as a group. That's powered by Moderna and Pfizer. On the downside, take your pick. You have two groups falling more than 2%, autos and consumer durables. That's really home builders. And the healthcare equipment and services space, Cigna, a big decliner there, all down by at least 2%.
You got to do it. What about the 48 groups or 69?
69? Well, you know what? Sometimes those indexes only have like one or two names. It's not a great gauge of things.
Where do we want to go? All right, let's just
party pooper. Sorry,
no, you're not a party pooper. Just real quickly, because we have them just crossing the Bloomberg. We've been talking about retail sales, specifically retail earnings this week. Ross Stores coming out with their second quarter numbers, $1.32. That's 16 cents better than what the street was forecasting, so that's a beat. And Ross Stores seeing their third quarter EPS of $1.16 to $1.21, so they're upping that forecast. The forecast out there is $1.15. Ross Stores up more than 5%. You've got some more earnings remain.
Yeah, Applied Materials out here. Their 3Q net sales coming in at $6.43 billion. That's a slight beat. The street was looking for about 6.2. We're just going to round it up a little bit there. So a beat on the sales figure, a beat also on EPS, coming in at about $1.90. The street was looking on average for $1.73. Here's your forecast here. The company, and a pretty interesting forecast, 4Q net sales, the company says could come in at about $6.5 billion. The street was only looking for about 5.9 here. So that forecast for the current quarter that we're in, the current fiscal quarter that we're in, would actually be a beat should it actually attain that $6.5 billion forecast. Shares higher by about 4% here in after-hours trading.
I'm just going to say that's a pretty significant move to the upside in the aftermarket, considering this is a stock that is up more than 41% so far this year, and that's outperforming the SOX, which is up about 36%. So really interesting to see, and we talk about the importance of what's going on in the semi sector, right, in terms of so much tells us about what's going on in terms of demand for chips that go into items, and so really interesting, or even semi equipment as it is with AMAT. really just tells us a lot of things, Scarlett.
Yeah, as you were talking about the forecast on fourth quarter net sales, interesting that the average consensus among analysts is for 5.9 billion. In fact, the highest estimate is only 6.3. With Applied Materials looking at net sales at $6.5 billion, everyone's going to be looking for some clarity and some more explanation on the conference call on what's driving net sales in the fourth quarter.
As you guys have been going through the numbers, I've been looking through the press release and looking at the commentary from Gary Dickerson, the president and CEO of the company. You can do another shout out to AI here. He said, over the past several years, we've focused our strategy and investments on key technologies to accelerate the Internet of Things and AI era, enabling us to consistently deliver strong results in 2023 and positioning Applied Materials for sustainable performance. I assume a lot of questions will come from analysts about what it plans to do in order to harness the uptick in AI that we've seen.
Yeah, I'm curious as to how big of a player they are in that space. And obviously, most of their business is foundry, so I don't know enough of whether the type of chips that AI needs, or the folks who are sort of investing in this need, whether that's something that comes through their foundry or not. It'd be interesting to get some clarity on that, and whether they're just kind of blowing their own horn.
I think there's a fair part of that for every company.
They all do that, right?
Yeah.
No, it's interesting, and they have a decent amount of cash on hand, generating $2.58 billion in cash from operations. So we'll see. Lots of questions. We'll continue to track, but again, as we said, the stock bouncing up in the after hours.
Is this going to be like the savior for the market overall, meaning like the chip space and really AI overall? I know we kind of have this debate about whether there's substance to it or just hype, but we've seen time and time again a lot of companies and chips and software, et cetera, are really showing very strong forecasts, not just what they made in the most recent quarter, but longer-term forecasts that are based on this idea that AI is going to be a power generator.
I don't know. I don't know the answer to that. I know that we've seen other cycles in the past where, especially with chip companies, where we've thought that, this could be huge for them. I think of cryptocurrency back in 2017 up to 2019, when we saw NVIDIA with one of its run-ups in the past because of, those chips used in cryptocurrency mining. I think this is certainly different. The question is to what extent is it like a layer, over our economy, like, quote unquote tech is a layer over our economy. I just don't know yet.
I wonder how much of it is also, it has to do with where we are in the cycle, right? Because we know there was a lot of inventory, but they've used up a lot of it. So it's a case of a new cycle, and we're going to start putting in orders. You could always cancel, can't you?
What's interesting? We're gonna have a VC guest a little bit later, and we're talking about how much VC money has really come down. But what's interesting is when it comes to artificial intelligence, if you want to know where the money is going, that's where it's going, and whether that's creating companies that ultimately bigger companies buy out, I don't know. But AI just seems to be, the thing that everybody is in love with, and it does feel like investor money continues.
Literally, last time we spoke, I think Katie sort of opened that door, as we said.
That's going to be a story coming up.
Do you want to go there?
All right. No, I don't want to go there. I do want to go to some of the individual gainers. Number one gainer in the S&P 500 and the NASDAQ 100, I'm going to just talk over you, is Moderna, up 7.4%. I have no idea why. Call volume above normal, directionally bullish, still down about 41% year to date, but it was a standout in today's trade. So that's on my radar. Cisco, number 2 in the S&P 500, number 2 in the NASDAQ 100, up the most, I think, about 6 months.
Now, is this the Cisco, the food delivery company?
No, come on. We talked about it last night after the close.
Okay. I get confused.
There's a
Is that a rhetorical question?
I'm surprised.
There is a Slovak word, pukashitel, troublemaker, and that's exactly
now you know the secret.
That is Romaine. All right, so Cisco, outperformer, company outlining its headway into AI, fiscal fourth quarter results last night. Outlook investors are really excited about, so that's why we see this one really outperforming. One more for you. It's a small market cap. Please do not judge me. Microcap, about 546 million. Gambling Corp, gambling.com actually group. It's up about 16% in today's session. The digital marketing company reported second quarter revenue that beat the average analyst estimate and boosted the full year outlook.
That's okay, Carol.
That's cool.
I did a company yesterday with
$500 million market cap.
I did a $62 million market cap company yesterday.
You judge.
Now it's lower.
What's DWAC doing today?
Now it's lower. All right, well, let's get to some of the decliners today. We've been talking about this story all day. Walmart shares finishing down more than 2.2%. The company actually had a pretty good quarter. In fact, it raised its profit forecast yet again. Doug McMillon, though, the company's CEO, came out and made some comments that got investors concerned about what the consumer looked like. kind of similar to what we heard from Target's CFO yesterday. The rising borrowing costs, rising oil prices, and then, of course, those student loan repayments starting up again in just a few months. That's going to hit an already strained consumer. Jen Bartashis over at Bloomberg Intelligence told us that is what is moving the stock because, this quarter, well, certainly I would say the fourth quarter is the most important, and this one as well with back to school and then the holidays coming. So the second half of the year, if the consumer isn't strong, then that's certainly an issue. CVS Health having a very bad day, worst day since October of last year. At its lowest, it actually fell the most since March of 2020, down more than 8%. This is after Blue Shield of California, it's one of the California's largest health insurers, said it would drop CVS's Caremark as its main pharmacy benefit manager. Instead, it's going to switch to a group of companies. It's going to include one from Amazon, one from Mark Cuban, that's Cost Plus Drugs. It expects to save as much as $500 million a year doing that. The concern, of course, is that other companies could start doing this too. We saw another company, we saw Signifel as a result too, because other companies could switch their PBMs as well. Wolfspeed finished the day down by more than 17% after the company reported adjusted fourth quarter loss that was wider than expected.
I'm taking notes. I think I have my two gainers for tomorrow, AMAT and Ross Stores, because they're both, AMAT's up about 3.5%, Ross Stores up about 5%. So
did you see Farfetch?
No, what happened?
Down 26% here. They just reported earnings, a big miss there. So another slice. I guess that's more luxury retail, but something to keep an eye on as well.
I'm not surprised Ross Stores is doing well, given that TJX had something similar, right? I mean, they're in that same segment of the retail market.
All right, guys. So things moving in the aftermarket. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals, folks. We call it Beyond the Bell. We will see you again tomorrow. All right, we're going to shift our focus for a little bit as we broke down some of those earnings still in the U.S. We're just wrapping up the U.S. earnings season, to be fair. And then, of course, we've been talking a lot about what's going on in U.S. yields and the U.S. economy. But, man, another 24-hour news cycle dominated by headlines, Tim, out of China.
Yeah, so everything from Chinese authorities telling state-owned banks to step up intervention in the currency market this week. This in a push to prevent a surge in yuan volatility. That's according to people familiar with the matter. And Carol, after onshore yuan trading fell toward its lowest since 2007 amid weak sentiment.
A lot of stuff. China's housing slump much worse than official data shows. That story on the Bloomberg. And also you've got investors from across China who put money in a troubled shadow bank, saying police officers visited their homes and urged them to avoid public protests. There is a lot going on. It really is, though, the backdrop of China looking for ways to shore up their markets and calm investor and domestic concerns. So what has become our daily update on China, and rightfully so, with us is Bloomberg Economics senior economic analyst Gerard DePippo. Forgive me, am I saying it wrong? He's in our Washington, D.C. bureau. DePippo. Forgive me, Gerard. In our Washington, D.C. bureau. Really nice to have you here with us, and grateful for it, because it does feel like we're trying to make sense of all the headlines that come through China and what we really need to pay attention to on a daily basis. What is important in the last 24-hour news cycle for you?
There's at least two things I would highlight. The first, which you mentioned, is the PBOC's intervention, or rather directives, to tell state banks to intervene in the foreign exchange market to prop up or at least stem the slide of the RMB. The big thing that happened was that every day the PBOC will set the fixing rate, and today it set it at a much stronger rate than the market expected. So a Bloomberg survey had it supposedly coming in around 7.3 to the dollar. It came in at 7.21, and that is the biggest disparity between the expectation and the fixing rate since October. So there's a long track record of the PBOC using the fixing rate to essentially guide markets to where they want them to go when it's facing periods of weakness. That's happening now, but the rumor is that they're also telling state banks to intervene, including in the offshore market, to prop up the RMB on the PBOC's behalf. The second thing is also, as you mentioned, that there have been a series of defaults actually from a major trust company in Beijing, which basically has defaulted on at least 30 financial products. Trusts are sort of like banks, but it's usually rich Chinese put money in there, and then the trust will lend, usually making fairly risky bets. A lot of those bets are related to real estate, and as you know, the real estate sector in China is doing quite badly. So you're starting to see the effects in the trust market as well.
These are the so-called shadow banks, correct?
Correct. Yeah, and actually, I mean, just for context, the entire trust sector is probably something like 5% of overall financial assets in China. They used to be much bigger, actually, but around 2016, 2017, the Chinese government started cracking down on them. So it's probably not as big of a problem as it would have been back then. But the fact is, you're seeing some ripple effects from the real estate slowdown.
Well, let's talk about those ripple effects. To what extent should people be concerned that those ripple effects actually extend beyond these shadow banks?
Well, property is arguably the most important sector in the entire Chinese economy. I mean, before the 3 red lines policy that started slowing it down, we would have said that something like 25% of China's GDP is related to property when you're factoring all related inputs and outputs. Construction has just plummeted. New sales and construction are down substantially. So China went from having the largest construction boom probably in the history of the world to it contracting substantially. And because of the importance of property in terms of land finance for localities and as collateral and as essentially a savings vehicle for households that has ripple effects throughout the economy, the trust action itself, I wouldn't be too worried about that in itself. But the fact that the property sector is weak is a major macro risk for the Chinese economy.
So it's interesting, too. The data point, we've always been a little suspicious, it feels like, Gerard, of some of the data that comes out of China. But, private data may be showing the housing is even worse than before. How do you guys assess or feel confident in terms of your assessment about what's going on in China?
Well, even using the official data, it still looks quite bad. The construction slowdown is visible in the official data. There was a Bloomberg piece yesterday pointing out that actually the declines in prices, including in major cities, are probably worse than the official data suggesting. So the official data has it down maybe 2 or 3%, but it's maybe in a double digits based on what actual property developers are reporting. So you can try to account for that. But again, even with the official data, it's bad enough. And just sort of the atmosphere from everyone I've spoken to in China is that everyone just knows the property sector is doing badly.
Okay, so that's what I wanted to talk to you about is, we get official data. Then yesterday we learned that the Chinese government was going to kind of pull back on some of that official data. Gerard, what are you looking to get the information that you need to know as senior geoeconomics analyst for Bloomberg Economics? And what should our investing audience be looking at?
You have to look at a lot of things. I think over time there have been more sort of private sector series or series related to what listed firms report. But again, there's enough in the data, just the official MBS data, to tell you where they are in the cycle. And it's the worst downward cycle in property they probably ever have had, right? So how bad is that relative to GDP? That's hard to know. I mean, the problem, there's a long history of sort of proxy indicators for GDP, but ultimately there's no substitute for GDP because everything is just trying to align with what you think that ought to be, but there's no independent verification. But I think in general, what's striking to me is how negative household and investor sentiment is in China, and China hasn't reported consumer confidence since April, but even then it had barely recovered from the lows the previous year. So I think just sort of the atmospherics, what we're getting from people in Beijing and elsewhere, is it's quite negative. But on the other hand, the Chinese government has not done anything substantial to respond. Yes, they reduced interest rates a little bit this week, but what we're waiting to see is anything on the fiscal side, and they've been quite cautious with that. I think in part because localities are tapped out in many cases because of their reliance on land finance.
I feel like, Gerard, for such a long time, we've thought about emerging markets and certainly put China in their own category, right? Not like maybe all of the other volatile emerging markets out there, at least on an investment basis. I mean, does this remind us that China is a different system and does still have the volatility of many less developed emerging markets that are out there?
Well, it is an emerging market, but yes, it is idiosyncratic. And I think one of the big differences is that swings in the Chinese market are overwhelmingly driven by domestic factors. So it does not rely, for example, on foreign capital flows. People have reported how there's a lot of foreign investors pulling money out. That might be true, but relative to the overall financial sector, it's still quite small. So what's happening in China is a combination of the property sector decline plus sort of flatlining exports and just kind of the consumption rebound being weaker than the Chinese government had expected. Right. That's sort of a more internal mechanism than you would see in most EMs. I should also note, by the way, because we were mentioning currencies earlier, if you look at the RMB on a trade-weighted basis, it's actually appreciated over the past month. So actually the declines the RMB are seeing against the dollar are less than most EMs.
Interesting. Well, the point that I want to go back to, though, what you said real quickly about it being overwhelmingly led by domestic factors, not investor funds coming in and out or whatever, or the whims of global investors. Does that make it an easier problem for China to solve? And just got about 15 seconds.
It's easy to
You
sense
could
that
say
they have
no.
capital controls. It makes it more complicated, but it also opacity matters.
Come back soon. You're a rock star. Bloomberg Economics Senior Economic Analyst Gerard DePipo. He is in our Washington, D.C. bureau. Killer stuff.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. Applied Materials out after the close of trading, and Applied Materials shares right now, they're up by roughly 1.8%. Applied, of course, the largest American maker of chip-making machinery, and it delivered a bullish forecast for the current quarter, indicating that an industry slump may be fading. Also reporting after the close of trading today, we heard from Ross Stores, the ticker there, ROST. After hours, that stock up now by roughly 2.5%. It reported the earnings per share for the second quarter that did beat the average analyst estimate. Stocks lower for a third day today. The Dow, the S&P, and NASDAQ all ended the session in the red as a global bond market sell-off intensified and tamped down enthusiasm for growth-oriented tech giants. S&P was down 34 points, a decline of 0.8%. Dow Industrial was down 290 points. That was a drop of 0.8%. And NASDAQ, the composite index, down 157 points, a drop today of 1.2%. 10-year yield, 4.28%. The 2-year, 4.93%. Spot gold, $18.89 the ounce, down 0.1%. And West Texas Intermediate crude up 0.9%, $80.13 a barrel. So again, recapping, the Dow, the S&P, NASDAQ all ended the Thursday session lower. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So I don't know if you recall, but Bill Gates back in March talked about seeing an artificial intelligence system ace a tricky medical examination and how it represented the most important advance in technology since the graphical user interface, the GUI. He said that software that, of course, lets people to more easily interact with computers, and in the 1980s set the standard for modern operating systems, including Microsoft's Windows.
That's the GUI, Carol.
That's the GUI. I said that.
I know.
GUI wooey.
GUI wooey.
But keep in
That's
mind,
an incredible statement.
well, it is, right? Like you think about how game-changing that was. Keep in mind, Microsoft has an app. It's called the DAX app. It's powered by AI. It's from the company's Nuance division, and it transcribes doctors' and patients' comments, then creates a clinical physician summary formatted for an electronic health record. So AI in helping out doctors.
It's an episode, actually, of the Bloomberg Originals video series AI IRL earlier this year. It can be found on our streaming service. With more on the topic, and curious if AI is yet penetrating his world, we got back with us Dr. Ian Lustbader. He's clinical professor of medicine at NYU Langone Medical Center. He joins us on Zoom from New York City. Dr. Lustbader, how are you?
Great to see you guys, Carol and Tim. Tim, congratulations on the newborn. Hope all is going well.
Yeah, all is going well. Thank you very much. Hey, how is AI hitting your world? I mean, the medical community is one where I got to tell you, sometimes I'm still required to send faxes.
Right. Well, we're not there yet, but okay. AI has tremendous potential. And AI functions in many ways like a person or a doctorate. Takes a lot of data points, analyzes it, and processes it, and comes up with some conclusions. We're still not quite there integrating in every way, but the potential is enormous, from scheduling appointments to pre-interviewing patients to find out what they're coming in for, assisting with the diagnosis in the exam room.
Well, talk about that part, assisting with the diagnosis. That's really interesting to me, because what you guys as doctors try to do, and look, I didn't go to medical school, but I've been to plenty of doctors. You ask so many questions about symptoms, and each time somebody answers a question about that symptom, you know, there's sort of this calculation that goes on inside a doctor's head. Okay, it could be this or it could be this, and you keep investigating. So how do you use, you know, first the internet or databases right now, and how do you think that can be aided by AI?
So we, in a very similar way, extract information. A patient comes in with a complaint or an issue. We review a variety of questions that helps us hone in, eliminate certain things, and gives us the most likely diagnosis based on history. And then we get additional information from tests or labs to try and make a specific diagnosis and then a specific treatment. AI can be very helpful because it can also process a lot of questions, either interrogate the patient or review lab data and kind of synthesize the information. And we see this most helpfully, for example, with x-rays. If you're comparing a series of CAT scans, tremendous amount of data and subtle abnormalities can be picked up. Same for lab data. We're using it, for example, with colonoscopy, where AI picks up subtle abnormalities such as a polyp. Now, it can't really tell if that is a polyp or necessarily maybe a clump of mucus. The doctor still has to irrigate it away and say, oh, yes, you're right, and is pursuing it. So AI can be very helpful to say, hey, have you thought about this? Is this relevant? Do we need to explore it further? And whether it's developing new drugs, whether it's processing a lot of lab data to say, hey, it looks like this blood count has slowly been trickling down. Do we have to worry about bleeding somewhere? Could there be a cancer? So it's not really integrated yet into the medical record system. It's not in the office helping us yet. It's really more scheduling appointments. It's more helping with CAT scans or diagnostic tests, even robotic surgery. But eventually, I think it will come into the office to really help extract important questions from patients, extract important data, and help us make a diagnosis and a treatment plan.
Ian, how long does it take for it to come in, you think, in a really significant way?
A lot of that is based on doing trials. A lot of it is based on the developer of the electronic medical record. We spend probably 50% of our time documenting. So if we can expand our patient contact time and thinking time and reducing our documentation time, that will definitely improve our ability to get information. I think within the next few years, it's going to be in the office, but it's not certainly next month.
Do you see this from the incumbent players in medicine right now? And I think of one. I mean, Epic Medical Systems is like, if you go anywhere, Epic owns the room. Are they going to do it?
Epic is the behemoth.
It's the behemoth.
Well, they're talking about it. Yep, it's the behemoth. All the major medical centers, they've been able in a few short years to really dominate it. And basically everyone has to join now because all the big players are on it. And it is actually a pretty good medical record system. They are working on it, and we're working with them to develop different algorithms. But it is not yet interviewing the patient. It is not yet documenting, helping us document. We still have to dictate the chart or type the note. And it is not at the end of the day helping us process the information and say, hey, you missed this low blood count or high liver enzyme. Maybe we should look into it. I think that's going to happen. But I don't think it's going to happen in the next year.
Do we need one system, though, for this to really work?
Yes. And we've talked about this before for many years. Having a national system where if someone goes to a hospital across the street or across the country, we have all the information integrated so we can do less tests and have to be less redundant in what we do. But that is a problem with administration and HIPAA and privacy violations. We really would need the government to say, look, we're mandating that everyone have one system that puts everyone on one platform. So that's also a few years away, but we should have done that years ago. It's really been a waste of time having all these separate systems that don't really talk to each other.
So Dr. Lustbader, how does this end up in the operating room in the future?
Well, we're already doing it for robotic surgery, which is a tremendous advance. Small incisions. The robots really help us do very technically delicate procedures. There are better outcomes. It's helping with drug development. It's helping with analyzing studies. So it can take all our information, what patients are there and what's better.
We just lost your audio, Dr. Lustbader.
Is he coming back?
Yeah, I think he's working on coming back.
Okay. No, it's interesting. I do think about what it can potentially do in medicine. I love what he said about, like, you think about, you get an x-ray or some kind of an MRI or something, and where they can really put it into some kind of database and just say, okay, that looks a little sketchy. We need to look at it. Ian, you're back with us, and we have about a minute left here. No, it happens. It happens. You were talking about things.
I'm going to log back in, guys. I'm sorry. Somehow we got a little disconnected there.
That's okay, Dr. Lustbader.
That's okay.
So, Carol, go back to what you were saying. When it comes to medical imaging,
right?
You know, it's only as perfect as the person reading the image, right?
What if somebody has a bad day or is tired?
Or they just miss it.
It's not judgy. I'm not being judgy.
It happens.
It's life, right?
It happens.
Yeah.
Happens to people in my family. And you know what happens is there can be serious consequences to that. What if you were able to use AI? And I know they're working on this. There was an article in the Times just a few months ago when it comes to mammograms, using AI technology to try to find masses in mammograms.
And just if it's a case of able to go through stuff and then just say, listen, we got some questions about this. And then a radiologist or a doctor comes in and says, okay, let me take another look at this.
Yeah.
And it's another layer of really making sure that you don't miss something that's truly, truly important. I mean,
it's like, it's in a hybrid way, right?
Right.
Working hand in hand.
Right, and in terms of medicine, right, it's never necessarily an exact science. So if you are able to have some kind of database that pulls in all the kind of different variations of either an ailment or a reading on a scan that shows when there could be potential problems, I think about how valuable and important that could be. Ian Lustbader, we always look forward to it. Dr. Ian Lustbader over at NYU Langone Medical Center.
Well, let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Well, with concerns about China and North Korea growing, President Biden will be hosting a summit tomorrow with the leaders of Japan and South Korea. Bloomberg government's Jack Fitzpatrick has more on what they're likely to accomplish.
One goal is actually to set up a hotline for communication among those three leaders, President Biden, Japanese Prime Minister Fumio Kishida, and South Korean President Yoon Suk-yeol. Obviously, North Korea will be on the docket. Nuclear nonproliferation is something they have said they're going to talk about.
Jack Fitzpatrick also says it's possible North Korea could conduct a new long-range missile test during the summit. A Texas woman is in custody and charged with threatening to kill the federal judge overseeing Donald Trump's trial on allegations he tried to overturn the 2020 election. The Washington Post reports the woman allegedly left a voicemail at Judge Tanya Chutkan's chambers, saying if Trump was not elected in 2024, they were coming to kill her. The woman told officers she never planned to actually carry out an attack. The Georgia case accusing Trump and 18 associates of interfering with the state's 2020 election results could take some time to go to trial. That's the assessment from Dave Ehrenberg, who is the state attorney for Palm Beach County, Florida. Ehrenberg tells Bloomberg Sound On he is impressed with the Fulton County DA, Fonnie Willis.
She charged 41 counts, 98 pages of 161 overt acts of the alleged conspiracy. I mean, she even cited conduct in states that are not her own. I was in awe of this indictment. It was a tour de force, but because of that, I don't think this is going before the 2024 election.
Again, State Attorney for Palm Beach County, Dave Ehrenberg. Global news 24 hours a day, powered by more than 2,700 journalists and analysts.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Shares of Applied Materials now rallying by 3% after hours. Applied is the largest American maker of chip-making machinery, and it is out with a bullish forecast for the current quarter, indicating that an industry slump may be fading. Again, after hours, we've got Applied Materials up now by just about 4%. Ross Stores is reporting earnings per share for the second quarter that did beat the average analyst estimate. After hours, Ross Stores now trading higher by 6.7%. Stocks lower for a third day as a global bond market sell-off intensified and tamped down enthusiasm for growth-oriented tech giants. John Augustine is Chief Investment Officer of Huntington Private Bank. Right here on Bloomberg Business Week, he told us the Federal Reserve remains the big story for markets.
We erroneously thought the Fed would be done at their June 20th meeting. And they're not. They'll probably skip in September, but probably raise in November. So it's the Fed that's still on our mind. We thought they'd be off our mind by now, but that's not the case.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. S&P today fell 34 points. That was a drop of just about 0.8%. Dow Industrials down 290, a decline of 0.8%. NASDAQ was down 157 points, a drop today of 1.2%. 10-year yield 4.28% with a 2-year 4.93%. Spot gold down $3 the ounce to $18.88, drop there of 0.2%. And West Texas Intermediate crude up 0.9%, $80.10 a barrel. Again, recapping, stocks lower and earnings beat from Applied Materials. S&P down 34, a drop of 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Carol Massar, Tim Stanovic live in our Interactive Brokers studio here at Bloomberg headquarters on YouTube and Bloomberg Original. So, Tim, some data last month. It came out from the research firm PitchBook. It showed VC, venture capital funding, globally almost halved in the first 6 months of 2023. So showing investors just not interested, also some less demand amid sharply higher interest rates. And this is, though, despite huge interest in AI startups sparked by the success of OpenAI's ChatGPT. That's where money is going.
Yeah, investors poured more than $40 billion into AI startups in the past 6 months. That's according to the data, including the $10 billion investment by Microsoft in OpenAI and $1.3 billion in funding for rival Inflection AI.
All right, so let's get to it, because back with us to talk about what's going on when it comes to the VC world, and we're delighted to have her back with us, Sheila Patel. She's Vice Chair, General Partner of B Capital. She's former Chairman of Goldman Sachs Asset Management. She's with us on Zoom from Park City, Utah. Sheila, nice to be talking with you again. Last time I think it was at the Milken Institute Global Conference in May. How are you? And talk to us about your world and how things have changed.
I'm great. Thank you so much. And it's so great to chat with you again. I think the world since Milken has had some good news, had some rougher news. But overall, I think it's been a fascinating period to see how investor sentiment hasn't necessarily responded to some of the good news we're seeing on the economy, and particularly among public companies on profits and so on. So there's a lot out there to look to. But as you pointed out in opening this, when it comes to venture, there are definitely some challenges, and it'll be fun to chat about them with you.
Well, let's talk about the challenges first, and then I want to talk about the opportunities. So it's been choppy waters, certainly, given higher interest rates and a pullback on funding. And we've seen some venture-backed companies, cease to exist, cease to operate. It's a different world than it was in 2020 and 2021. What are the challenges that you're seeing at B Capital?
Well, I think, along with the entire VC community, we certainly see challenges, as you mentioned, in terms of investor interest. And I think institutional investors' data, a survey of about 44 LPs, showed that almost 3/4 would allocate less to VC next year. Now, many of them have been strong allocators and supporters, and I think they'll be back. But I think there's definitely concern over valuations. And that's where sometimes challenging news can end up being good news. We've been very fortunate in being able to raise our latest fund, Growth Fund 3, and beat our goals with that. And you have seen several VC firms, particularly some of the largest, have some success raising money. I think because of those other themes that you mentioned, the interest in AI, the focus on areas where tech really can be additive in up and down markets. And that in many cases is enterprise and fintech, which are areas in which B Capital operates. So I think there's some high points, but in particular, investors are looking to really make sure that the people they give money to are focused on these questions of valuations. And that's where the data has really been stark and is the opportunity, maybe the silver lining to the cloud, so to speak, because valuations have come in and it means there are great opportunities to find good tech companies at much more reasonable and appropriate valuations.
Hey, Sheila, is AI actually helping you guys find better opportunities right now and able to go through maybe a lot more deals and figure out what really makes sense?
Yeah, I think applying AI to deal flow and to analysis goes hand in hand with looking at how our companies are using AI. And certainly I would say it's been an amazing partnership talking about AI with our strategic partner, BCG. When you look at the work that BCG has put in at all levels of corporate America and global corporates and thought about how to apply AI to solving some of the problems they're facing, it has really helped us take it in-house and think about ways to apply it in our own investing and our application of analyzing potential portfolio companies.
But I guess what I'm also wondering too, has something fundamentally, it's interesting to hear what you say about, you know, investor interest when it comes to VC. Is there something fundamentally structurally going on? We talk a lot about, I think we did at Milken, you know, the private credit markets and the amount of money that's out there. I mean, is there something structurally, fundamentally going on that's changing the VC world? Or is it like it's always been? Yeah.
Look, I guess I'll put my longer term hat on. It, to me, is the maturation of a segment of investing, just like we've seen other areas go through. There was a moment when index investing was young and new and some crazy valuations, some crazy structures, lots of things went on, and now it's a typical part of people's investment portfolios. I think when I look at venture and I compare it to the history, my 20 years at Goldman, my 30 years in the industry, and watching various areas come into their own, such as quant, even hedge funds, and private equity, they go through a maturation process, and I think it's a natural evolution. To me, I look at venture, and maybe it's because I'm one of the old people in venture. That's how young an industry it is. It's filled with amazing technology experts, but maybe you haven't seen as many market cycles. And at the end of the day, VC has to perform the same as other areas, and that maturation is part of why you see some funds able to cope with the changing environment, the same as you see some portfolio companies coping better with a more difficult funding environment.
Okay.
And,
So we only have a couple minutes left, and I wanted to get to the opportunities that you're seeing right now, Sheila. So talk to me about two opportunities in two senses of the word. One, geographically, where are you deploying money? And then also, what types of companies excite you right now?
Sure. Well, maybe I'll start with the last first, because I think it ties into that question of AI. I think that we spend so much time, and maybe this is a trend in general on the downside of certain technologies or of things in general, that the upsides sometimes get missed. And when I look at AI, I look at the way it can turbo boost drug discovery and research in areas that will be really important in a climate changing world, like crop protection. So a company like Atomwise, which is one of our portfolio companies, a small molecule expert partnering with the world's leading pharmaceuticals, biotechs, agrochemical companies to discover new ways and new treatments, whether drug treatments or whether crop protection, et cetera. So I think that's an incredible area for focus for AI, is drug discovery, small molecule work that can go beyond medications into other applications, industrial applications. That's amazing to me. And then, when I think about that broader question on opportunity, I think that what we have to look to is the longer term prospect for some of these companies when you have a lower valuation to start with. And that means from an investor perspective, you want to be sure that challenging valuations, you're challenging companies on the levels they're looking to raise.
Super stuff. So appreciate it. Sheila Patel, Vice Chair, General Partner, B Capital, joining us on Zoom from
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Ross Stores is out with earnings per share for the second quarter that did beat the average analyst estimate. Right now, after hours, looking at Ross shares, they are up by 6%. Also reporting earnings earlier this hour, Applied Materials, the largest American maker of chip-making machinery. It delivered a bullish forecast for the current quarter, indicating that an industry slump may be fading. Applied Materials shares, they are up now, bouncing around, but up by about 1.7%. Walmart has raised its annual profit forecast for the second straight quarter after scoring new sales gains with bargain-hunting consumers. Joe Feldman is Senior Research Analyst at Telsey Advisory Group.
Walmart keeps putting up better margins than expected. I think the lower freight costs are helping. And that's helping all of retail. Remember, a year ago, 2 years ago, freight costs were through the roof, especially ocean freight, and that's come down quite a bit. So that's actually helping to provide a little bit of a tailwind and give some confidence, I think, for Walmart and others to raise numbers for the back half.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Walmart shares, though, did fall today. Walmart was down by 2.2%. Among other retailers, we heard from Target yesterday. Target shares gained today by 1.1%. And those are some of the top company stories that we do have for you at this hour. I'm Charlie Pellet. Coming up, we'll take another look at markets right here on Bloomberg Business Week. And this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
Well, it is Bloomberg Business Week. That's Carol Nasser. I'm Tim Stenivek. Let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The ex-wife of slain Microsoft executive Jared Bridegan has been charged with his murder. Florida State Attorney Melissa Nelson says Shanna Gardner Fernandez was allegedly behind the plot that has already led to the arrest of her new husband and one of his tenants.
This investigation has uncovered the truth of Jared's murder. Henry Tenen did not act alone. Mario Fernandez did not plan alone. And Shanna Gardner's indictment acknowledges her central and key role in the cold, calculated, and premeditated murder of Jared Bridegan.
Nelson says they'll be seeking the death penalty in the case. Bridegan was shot and killed in the middle of the street in Jacksonville Beach last year in what authorities described as a targeted ambush. President Biden will be hosting his first Camp David summit tomorrow with the leaders of South Korea and Japan. The focus will be on better communications and the ongoing threats posed by China and North Korea. Pentagon spokesman Pat Ryder.
What we expect to see tomorrow will be significant outcomes that will cement our trilateral cooperation going forward. The deliverables that you'll see coming out of that will take that relationship to a new level.
Ryder says it's hoped whatever outcomes the three leaders reach, it'll benefit all those in the Asian-Pacific region. Officials say it is possible North Korea might conduct missile tests while the summit is being held. Hawaii Governor Josh Green says there are up to 111 known deaths from the recent wildfires. Search crews are continuing to look for remains in the ash. He says additional canine teams are on the way.
They are now up to 30 dogs. They'll move to 40. There's now going to be another about 225 relief individuals coming.
Green says access to hard-hit Lahaina will remain restricted while they search for the missing. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Tim and Carol.
All right, Nance, thank you so much. Carol Masser, along with Tim Stenivek here at Bloomberg headquarters. We do want to mention, Tim catching this as it was crossing the Bloomberg, has to do with China Evergrande Group seeking Chapter 15 bankruptcy protection in New York today. That's according to some court papers. Chapter 15 bankruptcy protects companies' U.S. assets while restructuring arrangements are well worked out elsewhere.
International debt restructuring deals sometimes require a Chapter 15 filing in the course of finalizing a transaction. We should note that Evergrande's petition references restructuring proceedings being carried out in Hong Kong and the Cayman Islands. Carol, the Chinese builder has been working for months to finalize an offshore debt restructuring plan. Yeah, I mean, let's speak to the bigger story that we've been talking about, the woes in China, specifically the property concerns there. And this has been, you know, one of the big players there and that we've been watching. I mean, they're multi-industry, the company overall digital technology enterprise, but nonetheless been worried about the property aspect of this. And so this is just another aspect of the China story. We're worried about the growth. We're worried about the yuan. We saw moves to shore that up. We talked about that earlier. But again, China just trying to figure out what are largely domestic concerns and trying to figure them out, especially when it comes to the property market and the contagion impact of that. Okay. No easy turn here. No easy turn here. Contagion to captagion. Okay. Or is it Captagon? I don't know how to say this. What? Oh, Captagon, I guess. Captagon, okay. Amphetamine type pill, Captagon. Okay. So this is the most read story on the Bloomberg terminal. Yeah. It's poor man's cocaine costing $3 a pill, threatens to proliferate. Officials see the risk of Captagon traffickers testing new markets. The U.S. and U.K. say Syria's Assad regime profits from sales. Yeah, exactly. It's interesting. As you said, selling for around $3 to $25 a tablet.
produced and trafficked by individuals and groups tied to Syrian President Bashar al-Assad and his ally, the Lebanese militia Hezbollah, according to the U.S. State Department and Treasury, the UK's Foreign Office, as well as independent researchers. Talk about the whiteboard.
Yeah, seriously.
That came out of that and the implications. Folks, we just scratched the surface on it, but go to Bloomberg.com to read more because it is our most read story, has been all day.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Hi, everyone. Bloomberg Business Week continuing on this Thursday live from the Bloomberg Interactive Brokers studio on YouTube and Bloomberg Originals. Carol Masser along with Tim Stenivek. Coming up this hour, we're going to tell you about the descent into crypto hell that started with a spam text from Vicky. It's all in a new book from Bloomberg's Zeke Fox, where he uncovered a crypto-powered human trafficking ring in Cambodia. You cannot make this stuff up.
Yeah, it's a really great story. Looking forward to that in just a few minutes. Also, remember our conversation this week about the wealthy Americans not feeling rich?
Wah, wah, wah.
Well, on that, we got Bloomberg Opinion's Allison Schrager. She writes about maybe why we should perhaps care more about that because as the cost of services has risen, the financial position of the affluent has weakened, and that makes the overall economy more fragile.
That's why you care. And we'll get into the ever-growing shift of how we all order and consume food at restaurants. We'll get to that in just a moment. First up, though, a check on the day's trade, top business stories, the news after the close continuing to come. Charlie Pellet on it.
Thank you very much, Carol and Tim. Here's what's going on. The Dow, the S&P, NASDAQ all ending today's session in the red. The Dow down 290 points, down another 0.8%. S&P down 34, drop there of 0.8%. And NASDAQ lower today by 157 points. That was a drop today of 157 points. So stocks fell for a third straight day as a global bond market sell-off intensified and tamped down enthusiasm for growth-oriented tech giants. 10-year yield today at 4.27% with a 2-year 4.92%. Spot gold down $2.50 the ounce to $18.89, down 0.1%. And West Texas Intermediate crude up 1.3% to $80.39 a barrel. Anastasia Amoroso is Chief Investment Officer at iCapital, and on surveillance this morning, she told us she is bracing for a further decline in U.S. stocks.
Well, the reason I'm looking for about a 3% downdraft from here still is because we now broke through some key moving average levels, the 50-day moving average, and then also the short-term CTA threshold. And if you look at what would be the next sort of reasonable stop for people to step in and potentially buy, it would be a 100-day moving average. And as I mentioned, that's about 3% lower from here.
And you can hear more of that conversation on the Bloomberg Surveillance Podcast. You can download it wherever you get your podcasts. CVS Health shares tumbled 8.1% today after Blue Shield of California, one of that state's largest health insurers, said it would drop the company's Caremark unit as its main pharmacy benefit manager. Again, CVS Health shares lower today by 8.1%. Recapping stocks lower, S&P today tumbling by 34 points, down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Hey, Carol, do you ever get those text messages from unknown numbers? Sometimes they say just hello, or maybe they have something more like, hi, David, I'm Vicky Ho. Don't you remember me?
I run in the other direction.
Okay, well, that's probably a pretty smart thing to do. I mean, I get them all the time, but unlike Bloomberg, Zeke Fox, and probably like most people who are just a bit technologically savvy, I ignore them. We're grateful that Zeke didn't, though, because even if it meant there was a risk, he'd be led to what's known as pig butchering. If you're a little confused, don't worry. This is all part of Zeke's brand new book. It's called Number Go Up, Inside Crypto's Wild Rise and Staggering Fall, in which he uncovers a crypto-powered human trafficking ring in Cambodia.
Yeah, Zeke's new book coming out September 12th. The excerpt is the domestic cover story of the new issue of Bloomberg Business Week on newsstands right as we speak, online at Bloomberg.com/businessweek and on the Bloomberg. With more, Zeke is with us. He is financial investigations reporter at Bloomberg News. He's on Zoom in New York City. Also here, the editor of Bloomberg Business Week, Joel Weber, here in our Bloomberg Interactive Brokers studio. Hi, Joel. Hi, Vicky. Hi, Zeke.
Only two of those three characters are real. This is an amazing excerpt I'm so excited for Zeke in this book. Number go up. You can pre-order your copy right now on Amazon.com, right, Zeke? And this is a little sneak peek of where some of the book goes, and we're just so tickled to have it as an excerpt in this current issue and as our cover story. And, you know, we're talking about Zeke here, and, you know, it all begins with this text that he got from a person named, quote unquote, Vicky. Who was Vicky, and what text did you get, Zeke?
Yeah, so Vicky sent me a text out of nowhere saying like, "Hi David, how's it going?" or something like that. And like, I'm not David, obviously. So I've been getting a lot of these. I've been kind of curious about them. I decided to.
Yeah. I mean, Tim says he gets them. Carol gets them.
I ignore.
Yeah, ignore, delete, report as spam if you can, right? But you wrote back.
Yeah. And the first part of this, like, is probably about what you would assume, where Vicky, she tries to make friends with me. She's flirting a little bit. She's sending me suggestive pictures. And she's like a beautiful, heavily airbrushed young woman who claims to be in New York like me, but does not want to meet up. And none of her pictures actually look like she's in New York. And after, I'm waiting for her to try to scam me because I wanted to know how it works. And it takes like days before, she's very patient before her true mission comes out. And she starts telling me about how good she is at Bitcoin trading, and that I gotta try to, well, she doesn't even say like, you gotta trade like me. She really plays it slow. She's like, you know, I'm just real busy today. I can't talk. Got to make like thousands of dollars on my Bitcoin trades. And then finally, after like a lot of trying, she's like, okay, I'll let you in on it. Download this app and send me some of this cryptocurrency called Tether. And that's what I was really waiting to hear.
What I love about it though is how slow she is. It's like, and this comes through in the excerpt, is like, you're like encouraging her along to like, come on, get to the point where you try and scam me.
I had to tell her that like, I really wanted a Tesla, like I need to make money. Like she was really wanted to make sure I was hooked before she went for the scam. And so I sent her, Tether is like it's a stable coin. It always costs $1 because it's supposedly backed by real dollars in the bank. And you can go on any of your normal crypto apps like Coinbase or Crypto.com or whatever. You can buy Tether, and then you send them to Vicky at her supposedly like magic Bitcoin trading app. And so all that involves is getting Vicky. So Vicky gave me her address. I mean, she walked me through it very carefully, and I sent her 100 tethers from like a normal trading app to her special app where I was going to make this like big score. But as soon as I sent it, she started telling me like I needed to send more. At which point I felt like it had gone far enough. I told her I was a reporter, and she disappeared. But the part where the story gets really dark and really weird is when I tried to figure out who is on the other end of these messages. Like, who could Vicky be? And it turns out
that I want to slow you down before I let you go there.
The great reveal.
Yeah, which
not so great.
You know, part of what the book is so much bigger than just this, right? Keep in mind, this is an excerpt. And Zeke, I do want to just like back up for a second and talk about how you ended up having this book at all.
Well, I was hoping that you would, because
this
really started. This started like you know, it's almost 2 years ago, maybe even a little more than 2 years ago. Joel came by my desk, and I had not been reporting on crypto at all. I tend to write about like weird stuff going on Wall Street, but I've sort of resisted crypto as a topic. Like most of you listening to this, you probably feel like, oh, I'm never going to get it. And like the constant like boosterism is kind of a turnoff. But Joel said, hey, what do you know about stable coins like Tether? And I thought, I mean, maybe like this once. I mean, if Joel wants a story, it might be kind of fun to look into it. But I mean, I don't think, I am sure that neither of us had any idea where looking into Tether was going to take us now.
Certainly not me. And we've had, great reporting from Zeke on Tether and more of crypto along the way. So yeah, just little pop of my own collar there for helping Zeke get inspired to write and get interested in Tether, because the Tether part is ultimately where this other side of your story about, quote unquote Bicky takes you. And I will say, this is where it gets dark. We've been kind of laughing, ha ha ha. It gets dark really quickly here, Zeke. And why don't you take us to this human rights catastrophe that you discovered on the other side of the world?
I mean, the truth, as I learned through activists and reporters on the ground in Southeast Asia, is that the people who send these text messages are themselves often victims of human trafficking. And there's whole office buildings of people who've been lured to, say, like Cambodia is a popular spot for this. And they've been lured there with the promise of a good job. Once they arrive, they're trapped and they're forced to scam people with the threat of beatings or torture or even worse. And it sounds like some sort of like QAnon conspiracy thing, but like it's real. These messages are often coming from people who are suffering like horrible abuses and can't leave unless they pay essentially like a large ransom to the gangsters that run these scam compounds.
Can you, Zeke, talk about who you met in Ho Chi Minh City and how he was able to escape from this one of these sort of prison-like structures?
So over video chat with the translator, I started interviewing people who had escaped from these compounds. One of them, his name is Twee. He's 29 years old. The first time we speak on Zoom, it's like a rainy night in Ho Chi Minh City. He's walking down the street, smoking a cigarette. I can see that he's missing quite a few teeth. And he tells me that he lost them in like a horrible beating by his captors. And it was truly a desperate situation. He'd been tricked into going to Cambodia. And he was only able to escape by stealing